Hi everyone, we are students in Berkeley class from Tulane University. The company we are talking about today is the Houston Wire and Cable. The group members we have are Yasin, Zach, Hunter, and Lin Feng. First, let's see how Houston Wire and Cable stock price goes on. 5 years ago, it went quite high to nearly $30 per share. During the recession, it went down to $5 per share, but however, since the economy goes up and its acquisition on June 2010, Houston Wire stock price recently goes up. Now, let's see some key points about Houston Wire and Cable. The stock is traded under NASDAQ with symbol HWCC. Its headquarters is at Houston, Texas, and the market capital now is about $257.36 million, which is a small cap company. Houston Wire is an electrical distributor, and recently Houston Wire acquired Southwest Wire Rope and Southern Wire in June 2010. This acquisition brings up Houston Wire's revenue in the year end of 2010. Houston Wire is a nationwide distributor. There are distribution centers around the U.S. Now it has 15 distribution centers. Houston Wire focuses on the markets of environmental compliance, industrial infrastructures, and power generation markets. The products are quite verified, and Houston Wire also provided lots of value-added services to raise its value to the customers, such as custom stripping. We can make orders of different types and different lengths of the products, and it is more convenient to the customer. And Houston Wire is the only distributor could done this in America now.
Okay, now I'm going to go through some of our financial projections of the balance sheet and the income statement. Houston Wire and Cable has really, for the last few years, kept little to no cash on their balance sheets. In addition, as of 2010, the debt-to-equity ratio was 1.16. Now that's slightly higher. It's actually a lot higher than it would normally be, and that's mainly because of the extra debt that they took on due to their acquisition of Southwest Wire Rope. We project, however, that they're going to generate enough cash flows in the next years to be able to pay down their debt and also maintain the proper amount of working capital. And we're projecting them to get their debt-to-equity ratio down to about 45% by 2015. And the income statement, we project them to have robust revenues for the next few years, really higher than what most analysts are predicting. Our 2011 estimated total revenues for Houston Wire is $420 million. Now it's a 36.39% increase from last year. However, we're kind of more pessimistic than some of the analysts is with cost. Basically, we're projecting a cost of sales to be around 79.45%. We found it difficult to find ways for which the acquisition would reduce cost of sales, since cost of sales were really just raw materials and inventories. So we really couldn't see any synergies there. If they were to be there, we would think that they're an overhead. We do believe that their overall cost will go down in the next few years due to their acquisition. We're anticipating their profit margins, their operating profit margins, to be around 7.5% in the long term, or at least in the next few years. And now on to the valuation.
Our forecasted price was found using the weighted averages of our calculated discounted cash flow valuation, price to earnings ratio, price to book value ratio, and enterprise value to EBITDA. Our discounted cash flow was projected out 5 years, assuming a risk-free rate of 3.15%, a market risk premium of 3.5%, and a 3% increase in the terminal period tax rate. We gave our discounted cash flow a 40% weighting, and it yielded a price of $12.87. Our price to earnings ratio of 1982 was given a 25% weighting and was found by multiplying our estimated 2011 earnings per share of 92 cents by the industry median PE multiple of 21.64. Our calculated price to book value of 15.74 was given a weighting of 15%, again found by multiplying our estimated 2011 book value per share of 5.41 times the industry median price to book value of 2.91. Finally, the enterprise value to EBITDA was given a 20% weighting and yielded a per share price of 15.74, assuming an industry median EV to EBITDA multiple of 10.41. Houston Wire and Cable's price as of March 28, 2011 is $14.49, and our 12-month projected target price is $15.61, giving us an expected return of 7.73%. With a current dividend yield of 2.35%, the implied total rate of return over the next 12 months is 10.08%. We give Houston Wire and Cable a market perform rating based on these projections. Thank you for your time from all of us here at Tulane University and Broken Road Reports.
The material covered in this presentation is the opinion of the presenter and should not be construed as a recommendation to buy or sell any of the securities mentioned. Investors should seek the counsel and their financial advisor before making any kind of investment. The presenter may or may not hold long or short positions in any of the securities mentioned.